Today's my remarkable topic is Employee Retention Tax Credit for 2025. Join me as I dive into the latest IRS updates on the Employee Retention Tax Credit for 2025 and see if I can make sense of all the changes. The Employee Retention Tax Credit, or ERTC, has been a lifesaver for many businesses trying to recover from the pandemic. It's a refundable tax credit that helps businesses offset payroll costs, and it's been a game changer for those who qualify. But with all the changes and updates, it's getting harder to keep track of what's going on. There's been a lot of confusion and misinformation floating around about who can qualify and how to apply. Some people are saying you have to have been shut down completely, while others claim you can qualify even if you are still operating. And then there's the issue of how to calculate your credit. It's enough to make your head spin. I've seen some businesses struggle to get their applications approved because they didn't have the right paperwork or didn't meet the exact requirements. And let's not forget the deadlines. Miss those, and you're out of luck. The IRS has been making changes to the ERTC program, and 2025 is no exception. One of the biggest updates is that more businesses can qualify, especially those that were hit hard by the pandemic but didn't completely shut down. The IRS is also extending the application deadline, giving businesses a bit more time to get their paperwork in order. But here's the thing. The IRS is cracking down on eligibility, so you have to make sure you meet the requirements. So what are the key changes? For one, the IRS is looking closer at how businesses calculate their credit. They're also setting stricter guidelines for what counts as partial suspension of operations. And if you're thinking of applying, you'd better have your ducks in a row. The IRS is auditing more applications and denying those that don't meet the requirements. The good news is that if you do qualify, the credit can be huge. We're talking thousands of dollars per employee. But here's the update that could make or break your application. The IRS is changing how they handle amended returns. If you've already filed your taxes, but think you might qualify for the ERTC, you'll need to file an amended return. And if you don't do it just right, you could end up owing more money. To avoid any potential issues, it's essential to work with a qualified professional who can help guide you through the process. To sum it up, the ERTC is still a great option for businesses looking to offset some of their pandemic-related costs. But with all the changes and updates, it's more important than ever to stay on top of the latest IRS guidance. Make sure you're working with a qualified professional who can help you navigate the process. If you've had any experience with the Employee Retention Tax Credit, good or bad, I'd love to hear about it. Leave a comment below and let's chat. And if you're looking for more insights on tax credits and pandemic relief, be sure to check out my related videos. Thanks to attention and watch my video.